Welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the relevant and important finance current affairs and the RBI notifications, press releases that are important from the exam point of view. And in today's session, I have brought for you a very important meeting that has concluded. Okay, and the RBI has released the press release regarding this meeting, that is the meeting of Monetary Policy Committee. So the Monetary Policy Committee meeting concluded on 7th June 2024, and in this meeting there are the major decisions that have been taken. There is the assessment that has happened of the domestic economy. There are some of the points that have been given, the data points that have been mentioned in regards to the growth of the country as well as the CPI inflation projection that has been given for the year, for the financial year 2024-25. So in this session, we are going to discuss about this Monetary Policy Committee meeting. What are the decisions that have been taken? What are the projections that have been made? We are going to understand that. Okay. So let's get started. Good morning to everyone. So welcome to the session and let's start with the session. But before that, do subscribe to the YouTube channel of EduTap and do join the Telegram channel where you will get the PDF of the session. So you will get the PDF of the session in the Telegram channel, and the link for the Telegram channel of EduTap is provided in the description box below. Okay. So now starting with the Monetary Policy Committee meeting, that is again the decision has been taken. So it is for the 8th time we can say that the decision has been taken that the repo rate will be kept constant at 6.50%. So on the basis of the current and the evolving macroeconomic situation, the situation of the country, the decision has been taken by the Monetary Policy Committee that the repo rate will be kept constant at 6.50%. That means repo rate will be kept unchanged at 6.50%. So why this decision has been taken? That is, the Reserve Bank of India says that we want to keep on pushing and we want to keep on aligning the inflation in our country to the 4% of the target. So what is the inflation target in our country? So the inflation target in our country is 4% plus minus 2%. That is, the inflation should be within the range of minimum of 2% to maximum of 6%. The inflation should not go above 6%. Okay. But we have to align the inflation to 4%. The inflation should be around 4%. So currently the inflation is above 4% or it is not aligning to 4% for the long term or for the coming months. So the Reserve Bank of India says that we have to align the inflation to the 4% target, and for that we are keeping the 6.50% of the repo rate. So the repo rate is being kept high. So if you see the trend, so the last time when the repo rate was changed was, here you can see it was May 2022. So till April 2022, the repo rate was 4%. So after that, the repo rate was increased slowly and slowly from May 2022 till Feb 2023. There was continuous increase that happened of the repo rate. So from May 2022 to February 2023, there was continuous increase that happened in the repo rate from 4% to 6.50%. So in February, the repo rate was increased from the previous rate to the 6.50% rate. And so the last hike that happened in the repo rate was in the February 2023. And after that, the repo rate has been kept constant. So from April 2023, the next meeting of the Reserve Bank of India happened in April 2023. So you can understand that from the April 2023 to June 2024, the repo rate has been kept constant at 6.50%. So remember that the increase of the repo rate started from May 2022. That was the off-cycle meeting. That was not pre-decided meeting. So from May 2022, the repo rate started to increase, and the last increase was seen in Feb 2023. After that, the meeting happened in April 2023, and from the April 2023 till June 2024, the repo rate is being kept constant at 6.50%. The RBI is saying that we are not thinking of decreasing the repo rate for now. That's why the RBI is saying that we are having the withdrawal of accommodation. That means still we are not thinking of decreasing the repo rate. Either the repo rate will be kept constant for the coming periods also, or the repo rate can be increased. But we are not thinking of accommodating. That means we are not thinking of decreasing the repo rate. So there is the withdrawal of accommodation. That means we are not thinking of decreasing the repo rate because decreasing the repo rate means if the decrease is happening of repo rate, that will decrease the interest rate in the economy because of the EBLR, because of the external benchmark linked rate. The repo rate has been connected with the interest rate in the economy. Okay, EBLR is the external benchmark lending rate that the banks follow. This is the minimum rate that they have to follow. Okay, so due to this and EBLR, the external benchmark, one of the external benchmark is actually repo rate. So if repo rate is decreased, okay, the benchmark rate will be decreased. So interest rate in the economy will decrease. So when interest rate decreases, you will take more home loans, you will take more car loans, or you will want to take education loan or something. So when the interest rate decreases, you will take more loans. When the loans increase, that means the money supply is increasing in the economy and your demand will increase. So RBI has clearly said that either we are going to keep the rate constant or we are going to increase it, okay, because we want to have the disinflation in our country, we want to decrease the inflation in our country, and we want our inflation to be around 4% for the long term period, not only for the short term. So that's why the RBI is saying that there is the withdrawal of accommodation. There is the withdrawal of accommodation to ensure that inflation progressively aligns to the target, that is of 4%, while supporting growth. So we are not even thinking of decreasing the repo rate for the coming period. Okay. So next meeting will be in August. So withdrawal of accommodation means that at least in August 2024 meeting, the repo rate cannot be decreased. Okay, it can be increased, it can be kept constant, but cannot be decreased. Now MPC, we have discussed that MPC has changed the repo rate. Sorry, MPC has kept the repo rate unchanged at 6.50%. And I hope you know that the SDF is less than the repo rate by 0.25% and the MSF is greater than the repo rate by 0.25%. So if repo rate is 6.50%, SDF will be how much? It will be 6.25%, and the MSF, that is greater than the repo rate by 0.25%, it will be 6.75%. So that is the basic idea. Okay. So these decisions that have been taken, that withdrawal of accommodation will be followed, 6.50% of the repo rate will be followed. So these decisions are in consonance with the objective of achieving the medium term target for the CPI inflation, consumer price index inflation of 4%. We want the CPI inflation, the inflation that affects the consumer, we want it to be 4% plus minus 2%. So the range is 2% to 6%, but we want the inflation to be around 4% for the medium term, for the long term. Okay. So that is the basic idea. Now in the new RBI website, this is how the percentages are shown. So here you can see that from the repo rate has been kept constant at 6.5%. That means standing deposit facility has been kept constant at 6.25%. MSF has been kept constant at 6.50%. And MSF rate is equal to bank rate. So if MSF rate is 6.7%, bank rate is also 6.75%. Fixed reverse repo rate is 3.35%, so that has also not been changed. Now coming to the assessment of the domestic economy, and there is a minor change that has happened in the assessment from in comparison to the annual report. So there is a data point that has been changed, so that we have to discuss that what is the change. Okay. So according to provisional estimates released by the NSO on May 31st, 2024, so provisional estimates have been released by the NSO. So NSO first releases the first advanced estimates, then the NSO releases the second advanced estimates, and then the NSO releases the provisional estimates for the growth in the country. Okay, for the growth in the country in 2023-24, that is for the previous year, previous financial year, what is the growth that has happened. So first advanced estimates are released, second were released in February 2024. Then that is even before the ending, this financial year ends in March 2024. So the financial year ends in March 2024, but the NSO had already given the projections in Feb 2024. That is why it is advanced estimates that are released in advance. Okay. So second advanced estimates were released in February 2024 without having the proper data of the last quarter of the financial year of 2023-24. That is January, February, March wala data was not complete for the 2024. Then the provisional estimates were released after getting the data for the March 2024 also, for the period of January 24 to March 2024. After getting that data, the provisional estimates were released in May 2024, 31st May 2024. So as per the provisional estimates, the growth that has been seen in in the GDP, the real GDP, that is the actual GDP or the actual production that has happened, actual growth that has happened in the country, has been estimated to grow by 8.2% in financial year 23-24 as compared to the growth rate of 7% in the previous financial year. So in the previous financial year, the real GDP, that is actually the expenditure. The production is seen through the real GVA. The expenditure in the country is actually seen through the real GDP. So real GDP shows the expenditure of the people in the country. Okay. So the real GDP has grown from 7.0% in 2022-23 to 8.2% in 2023-24. So from the financial year 23 to financial year 24, there is the increase of immense growth that has happened. So growth was happening in financial year 23 at 7%, but now in the financial year 24, as per the provisional estimates, the growth is happening at 8.2%. And for the real GVA, the growth was happening at 6.7% in the financial year 23, that is 2022-23, and the growth increased to 7.2% in 2023-24. So even the real GDP increased, even the real GVA also increased. That means expenditure and production, they both are increasing in our country. That is shown by the NSO data in the past year. Okay. Now coming to going forward, what is going to happen for the 24-25, the high frequency indicators. High frequency indicators are the time series data. That is the data of the previous years and the data that can happen. So the data is seen for the economy in terms of the goods exports, the production of the core industries in our country, such as coal, such as the electricity and such. So high frequency indicators, it compares the previous data with the current data, and then it tries to show that how our activities are going forward. Okay, what will happen to the activities going forward? The merchandise exports, the goods exports, we can say, the production, the consumption, how they are going to grow. So high frequency indicators of domestic economy are showing resilience in 2024-25. So as per the trend that we are seeing, it is shown by the high frequency indicators, the investment, the production, the exports, that the conditions are going to be resilient in the coming period. The southwest monsoon is expected to be above normal, so it will be better for the agriculture and the rural areas. Okay, so if the agriculture growth is happening faster, if the agriculture will be good, that means rural area will be prosperous. That means they will demand also. They will demand more. Coupled with sustained momentum in manufacturing and services activity, so merchandise exports are expected to be good. That means the manufacturing and services industry will be benefited. This should enable a revival in the private consumption. Okay, private consumption is going to increase. Investment activity is likely to remain on track. The private investment is increasing. The government is also doing the investment. It is also increasing the capital expenditure for the asset development in the country, for the development of infrastructure in the country. So the private investment, because of the good balance sheets of banks and corporates, the private investment is increasing, as well as the government's continued thrust on the infrastructure spending is increasing the capital expenditure, that is investment from the government side also. The external demand, as I have told you, that it is expected for the 2024-25 that the external demand will also be good for our country. So the world trade prospects support the external demand of our country. So seeing all of these good things are happening for our country, but because of the external reasons, the geopolitical fragmentation, the geopolitical tensions that are going on, the supply chain disruptions that can happen, or the international commodity prices that are volatile, due to these conditions, these are the negative conditions that can affect our growth scenario. So seeing the positive scenario and seeing the negative scenario, the Reserve Bank of India has said that taking into account all the factors, in 2024-25, the real GDP growth is projected at 7.2%. So the Reserve Bank of India, or the Monetary Policy Committee, we can say, the MPC has said that taking the positive factors and negative factors into account, the real GDP growth for 2024-25 is projected at 7.2%. That is higher. In the annual report, it was mentioned that the RBI is expecting the real GDP growth for 2024-25 to be 7%. Even in the previous MPC meeting that happened in April 2024, it was said by the MPC, Monetary Policy Committee, that taking all the factors into account, the real GDP growth of 2024-25 will be is expected to be 7%. So this was said in the meeting of MPC in April 2024. But now they have increased their projection. The RBI or the MPC, they have increased their projection that the real GDP growth is not going to happen by 7% but 7.2% for 2024-25. That means the projection or the expectation is increasing, seeing the good things in the country. Okay, now inflation. So headline inflation, the CPI inflation has seen sequential moderation, that there is moderation that is happening. The inflation is declining, the disinflation is happening since February 2024 in a narrow range from 5.1%. In the narrow range, the disinflation has happened from the 5.1% to 4.8%. Okay, food inflation but is remaining high, due to which it is pushing pressure on the CPI inflation. The food inflation is the major reason of putting inflation in the headline inflation. The deflation, that is the fuel prices actually have gone down. That means there is negative inflation in the fuel prices. The deflation means that there is the decrease in the prices. Disinflation means that the inflation is happening, the positive inflation is present, but the inflation is declining. The deflation means that there is the negative inflation or the prices are actually decreasing. So there is the decrease in prices in the fuel area, that is good, as well as the core CPI, that is the CPI excluding the food and fuel, that is the volatile things. If we exclude that, so that is core inflation. So that has eased further to 3.2% in April 2024. So that is also good, that the core inflation is declining. Core inflation excluding the food and fuel has declined a lot to 3.2%. Now, this is the good things. Looking ahead, there can be overlapping shocks caused by rising incidence of adverse climate events. So, we are expecting good monsoon, but what if the monsoon doesn't happen good because of the climate change, because of the adverse climate events? So, that is a bad thing for our country also, that the climate events, they are causing adverse effects in our production activities. Okay, so looking ahead, there can be overlapping shocks that can come from the adverse climate events that can affect the food production, and thus they can affect the food inflation also. Normal monsoon, however, is expected, and it can lead to softening of the food inflation pressures over the course of the year. Volatility is present in the crude oil prices, and the financial markets are also volatile, so they can affect and they can lead to the higher inflation. So there are the good things that are happening, there are also the bad things that are expected, and due to the expectations of the good things, that the food inflation is expected to be higher, but because of the normal monsoon it can go lower. Core CPI is lowering, as well as the deflation is happening in the fuel prices. So it is expected that in the coming financial year, that is in the financial year that is going on, 2024-25, the CPI inflation is projected at 4.5%, that is as per the annual report, as well as that is same as the April 2024 meeting that happened of the Monetary Policy Committee. So they also expected that the CPI inflation will be 4.5%. So this projection is kept same for the 2024-25. Now you know that what is CPI inflation. This is the inflation that affects the consumers, and the NSO, National Statistical Office, releases the CPI inflation. The CPI inflation or the CPI index, the consumer price inflation index, the consumer price index. So consumer price index inflation is released by the NSO. Okay, now consumer price index is made from different subcategories, okay, which includes food and beverages, pan, tobacco, intoxicants, clothing, footwear, housing, fuel, light and such. So you can see that these are the commodities that are being consumed by the consumers, that are being consumed by the people, normal people, common people, right? So consumer price index has all of these subcategories that have different weights the food and beverages have the highest weight, then the miscellaneous services like the doctor, education services and such, and after that there is the housing that has the weightage. Okay, so this is how the CPI inflation is made. Now, summary, the MPC noted that the domestic growth inflation ratio has before the growth was expected for 2024-25. The growth was expected at 7.0% and the inflation was expected at 4.5%. Now, the growth projection has increased to 7.2% and the inflation projection has remained same as 7.5%. So the domestic growth to inflation balance has moved favorably because the growth projection has been increased and the inflation projection is same as before. So there is better growth that is expected now. Okay, so this is favorable for the country. The MPC will remain resolute that we are committed, the MPC, the RBI are committed, they are committed to align the inflation at 4% for the on the durable basis for the medium term target, for the long term target. Accordingly, the MPC decided to keep the policy rate unchanged to meet the 4% target. As well as MPC has reiterated that we are having the disinflationary stance. We want the inflation to keep on decreasing until it reaches the 4%. We want the inflation to keep on decreasing until it reach the 4%, and we do not only want to reach 4%, we want it to remain at 4% on the durable basis. Okay, enduring price stability, the consistent price stability is required. The inflation is required to be at 4% so that we can have a strong foundation for the growth, because if the inflation is fluctuating, that can be bad for the economy. Okay, so enduring price stability sets strong foundation for the sustained growth in the country. That's why we are focusing on keeping the constant repo rate, as well as we are focusing on withdrawal of accommodation. That means we want the durable, on the durable basis, we want to have 4% of the growth rate. Okay, now these are some of the key highlights, okay, that has been summarized here. Key interest rate, that is repo rate, remains unchanged at 6.5%. Repo rate was last hiked in February 2023. Focus on withdrawal of accommodation to keep on aligning with the inflation target, as well as growth projection of financial year 25, that is 2024-25, is raised to 7.2% from the 7% that was expected by the MPC meeting in April 2024. Okay, inflation forecast is kept same at 4.5% for the financial year 25. Food inflation still remains a concern. The current account deficit for financial year 25 expected to remain well within the sustainable level. So it is not going to be increasing too much. The foreign exchange reserves touched a fresh high of $651.5 billion. So at some point we were very happy to reach $600 billion, but now we have crossed the $650 billion, and this shows that our economy is continuously growing. So touching a new milestone that has been said in the governor's statement. If you have heard the governor's statement, so Governor Shaktikanta Das, he has said that we have touched a new milestone. India's foreign exchange reserves has reached a historical high of $651.5 billion as on May 31st, 2024. India's external sector has also remained resilient. So this is it. I hope you were able to understand everything. Yes, headline inflation is retail inflation, that is CPI inflation. Okay. So this is the first question. I hope you will be able to answer this question. And before going to the second question, I want to show you the blogs that has been created by our team. So the team is working very hard to make these blogs for your easy understanding of the exam, as well as to get the strategy regarding the exam. Okay. So here the edutap.co.in, if you go to this, you will go to the free material in the blogs, and in the blogs there are different blogs that are provided to you regarding the exam information, job profile, strategy, courses, the success story. So if you go to the exam information, you can go to any of the categories. Let's say that I want to know about the RBI Grade B. Okay, so if you go to RBI Grade B, you will get all the information regarding the RBI Grade B, exam analysis, the eligibility criteria, the cutoff. If you want to know about the job profile, you can know from here, as well as even if you want to know about the success stories, that how the toppers achieve their dream. So the strategy that they have adopted in the written form, in the blog form, you can get that, so that you can understand the strategies that have been adopted by the achievers. Okay, even if you want to know about the strategy that what is the strategy for different components, for the government schemes, for the current affairs. So you can get this strategy from here. And at the end of the page, you will go to the join our Telegram channel. As I've told you that you will get the PDF from the Telegram channel, so you can join here. Okay, so directly from here you can join the Telegram channel to get the PDF. So now this is the first question. I hope you will be easily able to answer this question. Now coming to the second question. So this is the second question that I hope you will be able to answer. Okay, so this is it. Now a big announcement from EduTap that if you want to know the exam pattern, the syllabus of the exam, if you want to know, if you want to get the previous year questions that are also available with this comprehensive guidebook. So we are providing you this comprehensive guidebook for exam pattern, for the syllabus of the exam, for the previous year questions that are provided with this guidebook. And this is absolutely free of cost to save your time, to save your efforts, and you can easily download this guidebook. The link is provided in the description box below. Okay, so monthly reports, you do not have to go through the monthly reports for now. If any report is coming before the examination, if you think that the data point can be used in the descriptive part, then you can go through the monthly report. Otherwise, for the objective part, the monthly reports are not very important. Okay, if it is in news, you can just read what is in news. Okay, otherwise the monthly reports, you do not have to go through that completely. The annual reports, the biannual reports are more important. You are most welcome, Pooja. Thank you for attending the session. Yes, Shwetank. So there is a statement with the Monetary Policy Committee statement and the Governor's statement. There is also the release of the statement on developmental and regulatory policies document. Now this document that is released, in this there is different things that has been told by the Reserve Bank of India, like the bulk deposit from 2 crore limit, the limit will be increased to 3 crore, and different things has been told in this statement on developmental and regulatory policies document. Now the thing is that the RBI has mentioned that the details will be released separately. So I am waiting for those details to be released, because there is no sense to do the same thing again and again, right? So the exam is going to be like after 1 or 2 months. So the details will be released in the subsequent timeline. So we will discuss the details. Otherwise, if there is some important thing that has been mentioned here, I can bring a separate session for that. Okay. Durga, reports in EduTap magazine. So the report is being made by the current affairs team. You can take a strategy call or you can mail the team also. They will be able to tell you now, because I do not know that what reports the team is covering. Okay. You are most welcome, Sorish. You are most welcome, Ritika, Nitya. Thank you for attending the session, everyone. You are most welcome, Padmini, Amit, Shwetank. So this statement on development and regulatory policies, I will cover this document separately, and I am waiting for some of the more information to be released. So let's see. Okay. So this is it. Thank you for attending the session, and this is it from my side. Thank you, everyone. Thank you for attending.